Abatement of your personal tax allowance. Not something many people have heard of. You probably normally find this out when you've done your end of year tax return, or you get a tax statement or a tax code, and you think you paid all your tax because you're a normal employee or your accountant's taken care of all your taxes, and then you get another bill from HMRC and you have no idea why, and you can't understand it, and you can't get through to the revenue. So let's look at what abatement of your personal tax allowance means. This is all about HMRC clawing back money for people that they perceive earn too much cash. So let's look at what that means. Let's say you're in a very healthy position, you're earning £125,000 a year, brilliant. Let's say you're under PAYE, so you think you're in safe hands here, all your taxes are paid for, your tax, your national insurance, your employer's taking care of the whole lot. However, within that, they assume that your income's just filling up through the pots over the year, and they don't take into consideration something that you have down the bottom here. You have a personal tax allowance of £12,300. That's everyone's entitlement in the UK that's earning. But what does happen when you go above £100,000, for every £2 that you earn, you lose a pound of that. So again, if you gradually go all the way through and you get to the £125,000 mark, your personal tax allowance is now zero. And the issue you have with that is through the course of the year, HMRC don't know whether you're going to work for a month, 6 or a whole 12 months. So they often, in the first year, they don't apportion the removal of your personal tax allowance. So when you get to the end of the year, because you've gone over that threshold, you're a higher rate taxpayer, so you will now have 40% of £12,300 that you owe in tax that you didn't know you owed. So you need £5,000 of cash you've got to find, and something called payment on account, which we cover in another session. But just be mindful, if you know your income's above £100,000, be it as a sole trader, limited company or employee, understand that you will have a further tax liability because you've gone beyond £100,000. If you own your own company, there's a lot of ways to control this. You just peg your income to 99,999. Don't go above because you lose much more here. The effective tax rate, just so that you're aware of that, is around 60% compared to a normal employee, that's going to be paying 0, 20 or 40%. So try and keep yourself below that threshold, either by reducing your drawings, funding into pension schemes, doing anything you can just to stay below that threshold.